In a week when we have earnings out from some of the big tech companies, it's those tech companies that have been driving some of the positive effects on the broader market indices, the S&P 500 and the NASDAQ. We're talking here about these FANG stocks, as they so used to be called. Of course, we no longer have the G, that's now become another A, but hey, for the purposes of analysis, let's leave that to one side and talk to our guest today, Paul Rodriguez from thinktrading.com. We still talk about FANG, it's a bit like BRICS, I suppose, whatever it is, but it's a convenient acronym.
Everyone knows what we're talking about, pretty much.
So we'll get on to Google Alphabet in just a minute. But let's talk first of all about the broad sweep of tech stocks. What's the view?
Well, the view is that the heavyweights are starting to show signs of a top. And I think that means that we should be drilling down to look at the biggest of the big, the ones that were there at the beginning, the ones that have pretty much carried everybody up, hoovered up other companies along the way, kept the tech sector as hot as it's been. So I think we should be analysing the signs that are showing us that potentially these are in a reversal phase or very, very close to reversing their trends, and the impact that it could actually have on the major markets. We can see that the S&P is rising virtually in a straight line, but in these cases, one would look at the underlying markets to see how well they are performing, to see whether there are signs that they're going to turn down. And I think, when you actually look at these charts, they're very revealing indeed.
Yeah. Well, let's turn to look at the first one, Facebook, the F for FANG. And this is a pretty impressive chart. Well, we know, of course, Facebook is, as you say, hoovering up all the other major social media sites along the way. Yeah. It launched a few years ago, and it's made multi-billionaires out of many of those that have driven this company. Yeah. But where are we now here with this market?
Well, we are in a range, which is quite a statement given the fact that we've been in such a very strong upward trend. But not only are we in a range, we're in a volatile range. And a volatile range is usually an indication of a market that's what we call it's distributing, or in other words, there are long-term players exiting potentially the market. So therefore, I would be looking at this volatility with keen interest to see whether it can break the lower bounds of the range to indicate that a top is complete. Now, one rule of thumb that's worth looking at is if you're looking at the volatility on a daily chart but it doesn't appear on a weekly chart, then it may not be very significant. But if it appears on a weekly chart, then it becomes a much more important potential setup. So we can see on a weekly chart that the market hasn't really gone anywhere since July last year. July this year. Yeah, that's right. So since July this year, the market has started to struggle, even though the S&P has made new highs. Now, that's what we would call divergence. There's divergence between the index and these heavyweight stocks. So if it breaks the lower bound of that range, which comes in around the $160 level, then that would indicate very clearly that the market is making a top, and that's where longs should be exiting and potential short positions would come in. We haven't done it yet, but this sideways movement to me is of concern because it's really up to the bulls to keep the case going. Now that 180 has been a massive barrier. The market's failed a couple of times before it's got there. Of course, as always, the market may continue higher, but there is evidence pointing to the downside.
But anything higher from here would be resisted by that upside. This is the daily chart here, going back to that. So that's a good point too.
Again, technicals and trading is all about being flexible. When the market tells you it wants to go up, we have to listen. The market's telling us it wants to go sideways in a volatile range. That's telling us something. But if it does break that high, that is a signal. That would be a signal that the trend is resuming, and the bearish move would have been postponed.
Yeah, and then you've got this bottom support level here at around about the sort of 160 area here.
Yeah.
If it breaks there, I mean, where does it go after that? There's a bit of resistance here.
140 to 125. I think you'd be looking at quite a substantial correction. It may become volatile on the way down as well. But this setup is indicative to me of a market that is seeing, it's tiring in its bullish power. Yeah. So we have to be aware of it, even if it ends up not amounting to anything. It's still something that we should be focused on, just in case it does it does break.
Yeah.
So that lower line, I would look at the 160 level, just over 160, where the recent support came in September. I think that would be a good enough trigger. I think that would be a good enough trigger to indicate the top.
Yeah, fine. Okay, let's move on to the Netflix, the Amazon chart. Again, this is the daily chart, and you've drawn a solid line here showing that level of support, which is it's tried to break. Actually, it hasn't over the last 3 or 4 months or so.
So this is
that line of 931. It's
a perfect sort of example of the volatility that we would expect to see in a top, and it reminds me very much of the top that Amazon made in 2000. It was very similar. It was very volatile like this, and then it broke the low, and we saw quite a major correction. As much as I love Amazon, and for anyone who's used the Alexa system, it is absolutely it's brilliant fun to use, and it's a fantastic company. But that aside, that's why we look at the technicals, because it tells us really what the underlying market is doing. And it has been going sideways since June, and this lower line of support has been rock solid. So if it would be a major technical change of trend if it can break through that. So that is forming what I would consider to be a major head and shoulders reversal, which appears on the daily chart, the weekly chart, and the monthly chart, which indicates that this could be extremely strategic.
Yeah, this is the monthly chart.
Yeah,
that big spike up that we saw with testing and failing.
Indeed. So you've got 1, 2, 3, 4, 5, 6 months worth of effective sideways price action, with the lows clearly delineated by that 930 level. So if we can get through there, you're looking at sub 800, I should say. But ultimately, I don't like to put targets in.
No,
it would just indicate a major top, and then the trend would ride the other way for as far as the market wants to go.
Okay, so that's the line there for Amazon. Let's talk about Netflix. Just come out for the sake of those that follow fundamental news, and I know that you do look at fundamental news.
Occasionally,
a sterling set of results for Netflix. It continues to add subscribers, and of course, when it's got an existing user base, it's just a question of getting more cash on the balance sheet. But it actually looks a little bit stronger, I think.
It does,
than Facebook.
It does. Netflix, out of all of them, I guess this has got, I think, perhaps a little bit more potential. I mean, in terms of subscribers and acceptance towards Netflix and taking market share, I think they've done a brilliant job. They have got a lot of debt though, and that could well become problematic if interest rates go up. For the moment, it looks more bullish than the other markets, but I don't think it will be able to swim against the tide if the others are turning either. So for now, I think if you're long, you can still hold your position, but I would be very wary if that support line that you've drawn there gives way, because if everything else is turning, I would expect this to turn too.
Yeah, it's just to follow the higher lows, but if it breaks the higher lows,
you're
looking at turning your...
Yeah, this does look better. It definitely does look better than the other markets, but it doesn't mean that it looks extremely bullish either. There is volatility there for sure. It's broken up and it's rejected that sharp breakout for a start, and it's just sitting on support there. So it really does need to have another run up to look better. Okay,
let's take a look at the Google, the Alphabet, whichever way you want to look at it. You've given us a couple of lines to look for here. Again, this channel thing, this is the daily chart. It went into this channel with quite a sharp candle actually on the upside. What was that, 27th of April? I don't know what that was around, but
really smooth upward trend there. And then there was a head and shoulders that failed, and then attempt to break the high, that failed, came back to support, another attempt to break the high, that's failed. Of course, we're talking about round numbers here, and it's been pressing against some pretty round numbers. But again, we're looking at price action here, and what the price action is telling us, it's saying volatility, it's saying that the trend is finding it hard, or the market's finding it hard to make new highs and sustain new highs. So again, we break that 930 level, I think that would indicate a strong top. So keep your eyes on that as we go into the end of the year, especially if this pickup in the VIX starts to extend. So
increased volatility means potential downside for stocks. And,
absolutely. And there's so much good news that's already in the price with earnings, and so So when we get to the end of it, that what will the market be looking forward to?
Yeah. 246 times earnings, I think Amazon's on at the moment.
Amazing.
It's incredible,
absolutely
isn't it?
amazing.
That's, driving the gains. Okay, look, Paul, thanks indeed for joining us.
My pleasure.
To take a quick scoot round those FANG stocks as we look into the earnings this week. But Paul was looking out for a little bit further on than that and suggesting that we could well have seen possibly at the top in some of these FANG stocks. That's Paul Rodriguez from thinktrading.com.